Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for D-Day. Yep, that's what today is. It is June 7th, 2021. What is it, 77 years or so ago? D-Day occurred. Let's thank God for all of those soldiers. A lot of them, most of them gone, as you can imagine. But big thing for the world and the end of what was a real major war. All right, so now as we talk about the markets, another battle of types is going on, certainly not a war, is between traders that think the Fed's going to move quicker and those that think it's not. I had to do a piece today for TikTok on Bloomberg, and it was about what do interest rates mean for housing, and they were carrying that theme and they asked me to do a piece, so I did that. It's on their TikTok, this short, oral, about a minute long. And before I get too far on any of that, I want to remind you that I'm doing something. Remember, I said I'd start doing these webinars. I want to do one or two a week. I'm going to do one more this week, learning things. But it's called What's Up. In other words, what's going on in the market? What's up? Chart analysis, fast fire. You bring the symbol, I bring the chart. I'll look it up, we look at it, go through it like that. It's very fast paced, 15 to 20 minutes long, free. It's from 12:30 p.m., that's when I start it, until approximately 10 minutes to 1. You can get your invite if you didn't get it in the email already by calling my staff, they'll give it to you, or you're going to see an icon up here. Just click on that and you can sign up. Now, we do keep tally of who's signing up, where they're at, email addresses. If you take seats and you don't use them, I'm going to be upset and you won't get an invite, and I'll block the email address and your name in every way I can out of there. I want you to come, but I want the people that can make time for it to do it. So don't take a seat up unless you know you're coming. Wait till the last minute. If everybody did that, we'll probably be fine. Okay, so my viewpoint on the jobs data Friday was what a sweetheart number, right in the sweet spot. Did just what I wanted. Not a cold number, another 2 in front of it, or a 3, and not a 4, which could have been a little bit cold, but a 5. Not a 6, which could have been hotter, and the market was looking for that. The other thing I didn't want to see was a big revisionment. You didn't get that. The unemployment rate fell, and at the same time, it was the private sector that did the job lifting. I love that. And we did see an increase in wages. I thought it was perfect. So I think it's a slow road up through the summer. I think as people lose that extra $300 from the federal government each week, they're getting their jobs, they're coming back. They don't wait to lose that and then go looking. There's plenty of jobs. Some of these people can because there's just so much out there. And the picking is so good, they could probably negotiate a higher wage than you would think, which is a good thing as well. So that's what I think. I think the government is not going to act on this. I think they're going to sit tight and say they're data dependent. I think they meet, not this week, of course, I think it's next week. I think you wait on that. What would make them move off this number? Nothing. Are they going to talk the talk to begin the talk? That's what so many Fed governors are saying, of when to taper. Why? There's plenty of time to discuss it. That's just where I'm coming from on it. In ARK, the market fell on that news and came back today rather smartly. Is it trending? It really isn't. You have a lower low and a higher high. It's nice that it based out here and it's moved to a higher plateau, but it's not putting together a trend, and it has a lot of resistance at the 200-day average just above it at 115.51, along with now the upper Bollinger Band. That's formidable resistance. If you can clear it, it would be impressive. Do I think it's going to easily do it? No. And part of that's because it's not trending. If it decides to pull back, supports 107.53. The important thing, it's neither in a bullish or bearish trend. It is overbought, so I don't see anything that I like that much. Here's something brand new, because European stocks of developed European countries, I think they're going to be on fire. And it's time to start looking at them. This chart has been good. I have been watching it. You have the embedded reading, which keeps you in the play. I'm still looking for new highs on the move of 61. This is a chart that was down here into the 50s just in March in the beginning of the year. So as we've come out of the pandemic, this is one of the popular plays. Fully embedded, uptrend, calling for higher prices, and still I think the pros will keep buying it. This is something new you should keep your eye on. I think PAVE's got issues. This is the week where it should be under pressure. Why? What is going to happen with infrastructure? Now today President Biden met against with the Republican camp, but they're $1 trillion apart. How do they close that gap? I don't see it. I wish it would get closed, but I don't see it. I see the Republicans saying no to a lot of taxes. Janet Yellen, as we know over the weekend, preached to the G7 and got them to all agree on the idea, the word is idea, not passage of, taking home to their governments, the members of the G7, to see would the governments there approve a 15% minimum tax. Then you got to go into how is it applied, how does it work out between the different nations, but the 7 aren't enough. You got to get the G20 in there. So there's another step to go here, and of course the corporations are going to fight back because they give money to all these politicians. So they're not going to pay them an awful lot of money to create a tax they don't have right now. A lot of fighting there. Is a tax coming? Most likely. I don't know when. What about infrastructure? That's the more difficult bill. A real rough bill. I don't think the Democrats can get it passed on their own. So I think it's got to get down to a compromise, but I've been wrong many times. AMC, I'll never understand their business model, but up and away. Guess who's taking advantage of this move that's going on? Remember Playboy? You know, it was founded in Chicago. I'd been to the Playboy Mansion, luckily, in the West Coast, and to the one in Chicago in my lifetime. And just fascinating on it. But I can't believe it's starting again. You know, just unbelievable. And they're raising money because people just are, anything that there's a short open interest in, these Reddit people go after. In semiconductors, okay, I'm watching what's going on. You have an embedded reading. On embedded readings, what are you supposed to do? Well, if you took my course, it's called the Enhanced Bollinger Band course, on the website under the word education, you will see that on this type of pattern, I teach to be a buyer. There's a certain moving average. It's not here. I don't show it. That would be bought. I'm wrong in my thinking on a close in the slow stochastic under 79. And in this case, I'd be looking for the resistance at the 182.05, the importance of the 100-day average. I don't think you just ignore that. PODX. Too overbought in an uptrend. I said I thought it would have a lot of trouble right there, and luckily I've been right on that. ESGU, another one of those I brought on recently. It's embedded. This market's in more or less sideways action, but I still think it can probe up to the upper Bollinger Band because it hasn't done this since the very beginning of May. So it's been over a month. It can get back there. It was very narrow range here as well. So as the range widened out, it didn't get there. But I'm wrong. You always got to know where you're wrong. I'm wrong if that slow stochastic in the last 3 to 5 minutes of trade is under 79. That's when I just say, okay, time to get out. I'm not right. XLE, I teach not to buy the upper Bollinger Band. I don't change, and it's overbought. Somebody else can have that. EFA, love it. Embedded reading, I've been telling my subscribers what to do in this. It's the classic play. I'm still looking for higher prices. We'll see if I get my nose swipes like that. Gold markets, I still don't see anything. You lost the embedded reading. Momentum, it really counts on these things. And when you lose that momentum, it's got to rebuild itself. Typically, when you have a bullish momentum and you lose it, you become immediately overbought. So from overbought, you either correct the overbought by moving sideways to lower, or you re-embed. It's not showing any indication it wants to re-embed. The gold miner stocks are actually bearish right now. You have lower highs, lower lows. I think the pros will sell it at 38.91. How much money do you think I think they're going to risk on this trade? What if I told you 6 cents? Get over that number. If you don't make a lower low first and just go through it, I think they'll buy the market. I think they'll sell at 38.91, buy at 38.97, and then put a stop under this whole 38.02 area to see if the market's ready to turn back up. But I think it's a two-sided trade there. TLT, too overbought, up to a Bollinger Band top or thereabouts. I wouldn't be wanting to count that it gets much higher. FXE, right hanging at the 18-day average. The trend down, the bias up, It's a difficult one to call anything on. I don't see anything new that I think is going to happen there in a big way. So you put it all together, that's what you have. You click this if you're going to attend the What's Up live webinar. I'll open the door at 12:20 p.m. I start right on the button at 12:30 p.m. Central Time, and I want to end 20 minutes later. It is not recorded. It is not on a website. You either attend live or you don't know what went on. I'm Ira. You have a great day.